And it's For Your Money Wednesday. One of the keys to financial success, understanding the use of savings or debt for purchases has a major impact on your financial success.
And our financial expert, Andy Mattingly, is here to discuss the best way to purchase things and what should you use. Why is the method so important?
Well, the reason why it's so important is because how you pay for things, whether you use credit or cash or earnings, has an impact on your future success. So you could get overextended if you use a lot of credit. So you need to think about all these items and make sure you're using the right way to pay for them, or maybe you just don't buy those things at that time. So introduce a little financial discipline in your life.
Yeah, so give us the list of ways that we can buy these major purchases.
Well, there's really only 4 things you can do. Pay for it out of earnings. You can save for it and then use your savings. You can use all debt or credit to pay for it, or you can use a combination of some debt and some savings.
So what types of purchases should not be done with credit?
Well, never put everyday purchases like dining out, entertainment. You should never use those on there. Or don't use credit to pay off other bills or to pay the monthly payments on other bills. Those are kind of no-nos, can kind of get you in trouble really fast.
So what would you recommend you use savings dollars for?
Well, this is going to be a tough one, but you really should save for things like vacations, electronics, even clothing. You should use savings or maybe a combination of earnings and savings, because those are things that you can spend really quickly and get yourself in trouble. And if you save for it, at least you have a little discipline before you buy those things, and you know how much you can spend on, say, a vacation.
So I know you just listed them off, but your typical credit savings purchases would be what?
Well, a good one is a house. I mean, you probably aren't going to save enough to buy a whole house with savings, but you do need a little money down. And even though you can buy a house with 3% down, if you can get to 10 or 15%, you're going to get a little bit better deals. And if you get to 20, you won't have to pay the private mortgage insurance. So that's a good idea to do that.
So how should we approach buying a car?
Okay, a car is a really good one. You're probably going to use credit with that, but you got to think about how long you're going to have the car. If you're going to have the car 10 years, you don't need to put as much down. But if you want to trade every 2 or 3 years, put more money down, because if you don't, you're eventually going to get upside down, and that car is not, you're going to have too much debt against the car.
Is there anything that you would recommend we just use credit for?
I think one of the good things that you can just use credit for is a home renovation, because you can use the equity in your home, there's tax advantages, and you're adding value to your home. So that's a good thing that you can use credit for and get a real financial benefit out of.
All right, always great advice.
Absolutely.
Andy, thanks so much.
Thank you.
Good to see
Thank you.